So looks like inventory purchasing is up. Yeah, I built it. I built it in time. Yeah, I still can't fix the camera. EPS, I still have to dig for. Hold on, give me a second on EPS. DRS at 8.9 million shares. Negative 182. Yep. Damn, that's a mess. Negative 194? It's blue. I should have the camera fixed tomorrow. I might need to buy a new one. No, adjusted 194? Is it negative or positive? Makes a big fucking difference. Hold on. I have the document here. Just gotta scroll through it all. Negative. Okay. I just opened it. That's not surprising with the spending. Also, spending on advertising up. Was that significant at all? Television, digital, print advertising, 93.6 million. Advertising up 50%. That's good. $101.3 million available in share repurchase authorization, which they noted. Short-term debt way down off the previous quarter. Merchandise inventory is way up. 915 to 602. Long-term debt down from 216 to 40.5. Stockholder equity up to 1.6 from 400 from 0.436. It's good. They noted in 3 places they have 101.3 million remaining in open share repurchase. So I mean, what better time than now? DRS numbers are up 71% from the prior quarter. Was 5.2, added 3.7 to 8.9. And it's right with like in the lower end of my 8 to 12 million estimate. I'm surprised it's that low. That's kind of startling. But I mean, it's better than nothing. NFT marketplace to open with the next quarter or two. Any information on if they sold their IMX? So 4 to 5 months. Not that we found. Okay. We'll see. They can still offer guidance, so. Why would you care about DRS numbers? It's relevant, right? It's materially relevant. Did you guys pull a beta? I'll just look. Noted acquisition information. The repurchase is good. I mean, they need it for new hires. Let me look for sales. Net sales 4.1 billion. A total 6 for fiscal year end. The quarterly. Net sales 6 billion, yeah. I think the volume after hours is covering. No. Looks like they shorted it hard at close, and now they're waiting to see what forward guidance is. Any chance DRS numbers look good to institutions like seeing a committed retail? Institutions probably aren't a big fan of share lockup. It just means less liquidity in the float for them, right? They don't care about that. They care about earnings. What's forward guidance? 125 retail investors is based on issued shares. Why would they even have or report holders of non-issued shares? Synthetic. What is a long FTD? It's a share purchase not satisfied. Technically, yeah, the FTD to the ETF is long. Earnings call hasn't started yet. It's going to start at 5 p.m. We got about 7 minutes. Acquisition cost integration. Companies to acquire or invest in is what I was referring to. Speculation of LRC, possibly, or a spin-off company. I mean, they have the capital to do it. Remember what I was discussing earlier in the week. If they spin off a company, right, and grant GME holders equity in that company, like say 10-to-1, right? You get 10 shares of the new company, whatever it is, and short sellers have to pay for that if they're short the share. So it kind of creates like a dividend situation. This is something I think he's attempting with BBBY and Baby, like Bye Bye Baby. By spinning them off and creating a new public company, you create shareholder value in the new company. Baby stop? Maybe. Who knows? Your shoulders look brawnier. I think they're just more visible because the chair is taller, J-Fresh. My shoulders didn't get brawnier between the end of stream at 4 o'clock and now. But NFT platform equals can officially say GameStop is a tech company. Yeah. Total shareholders 125,543. Sounds about accurate. That's just DRS accounts though, right? Or is that the thing the guy sued for? I still got to dig through this after the earnings call. I'll have more information tomorrow, obviously. God. You've been rowing? No, I just built the chair and then got back on the stream. 8.9 million shares registered, yeah. Which is at the low end of what I predicted, but it's not terrible. It's definitely slowed down a lot. But that's as of January, so, you know. You have to remember that that's always on a delay. So there could be more shares registered now, but it's still not a huge number yet. Yeah, DRS number is 8.9 million shares. Quarter four sales are up. Yeah, as they should be. $4 million increase in 3 months, though. That's insane. I mean, it definitely implies that retail doesn't own the float. I'm not going to get into it. Lesser enough slowdown. Shares owned prior to Supersonic registering is unknown. That does fall outside of my expectations. It should fall outside of everyone's expectations. Didn't the DRS bot have it way higher? It's shares outstanding, right? Bot had it at 1 million over. Trimmed average. Okay. They should be operating at a loss and focusing on growth. I mean, that's like I said, don't expect great earnings, right? I was trying to tell everyone all day. They don't expect EPS to be like astronomically high or high at all. DRS trim average was 8.86. Okay, so pretty accurate. Yeah, they bring up short squeezes as a risk factor to buying their stock. It's not uncommon in these reports. I think it's something that should be noted for any company that's sustaining a large short position on their common stock. Last year, record holder accounts 1,693 to 125,000 this year. It's not started yet. I'm on the call. I'm on the call. Relax. It hasn't started yet. Missed my super chat. It was very important. What did you say? I didn't see it. I'm sorry, man.
And welcome to GameStop's fourth quarter and fiscal year 2021 earnings conference call. At this time, all participants are in a listen-only mode. As a reminder, this conference call is being recorded and will be archived for 2 months on GameStop's investor relations website. This call will include forward-looking statements which are subject to various risks and uncertainties that could cause actual results to differ materially from expectations. Any such statement should be considered in conjunction with the cautionary statements and the safe harbor statement in the earnings release and risk factors discussed in the reports filed with the SEC. GameStop assumes no obligation to update any of these forward-looking statements or information. A reconciliation and other information regarding non-GAAP financial measures discussed on the call can be found in the company's earnings release issued earlier today, as well as on the investors section of the GameStop website. Please note that the company will not be hosting a question and answer session as part of today's call. Now, I would like to turn the call over to the company's Chief Executive Officer, Matt Furlong.
Thank you. I want to begin by thanking all of our team members for their dedication and hard work over the past fiscal year. It was an important period of foundation building, significant investment, and cultural change at GameStop. While we are still in the early stages of our transformation, we believe the steps taken over the last several months will be key value drivers for quarters and years down the road. The first year of our transformation was about starting to turn GameStop into a customer-obsessed technology company, one that has wider offerings, more competitive pricing, faster shipping, stronger customer service, and an easier shopping experience. With that said, here's a brief recap of what changed in fiscal year 2021. We installed a new management team comprised of technology veterans and introduced a more equity-focused executive compensation structure to increase alignment with stockholders. We refreshed the board with stockholders and individuals who possess records of value creation while reducing individual director compensation. We ended relationships with high-priced external consultants who were costing the company millions of dollars per year. We hired hundreds of new individuals with e-commerce, operations, and technology experience while eliminating many redundant and unnecessary roles. We recapitalized the company's balance sheet after raising approximately $1.67 billion in capital. We expanded our product catalog to seize more market share in areas such as PC gaming, personal electronics, and virtual reality. We invested in our fulfillment network by standing up new facilities on the East Coast in York, Pennsylvania, and on the West Coast in Reno, Nevada. We invested in our systems and tech stack after years of decay and neglect. We invested in U.S.-based customer service and established a new facility in South Florida. We invested in a dedicated blockchain team and new capabilities to drive the development of initiatives such as our NFT marketplace, which we expect to launch by the end of the second quarter. We see significant long-term potential in the more than $40 billion market for NFTs. In keeping with our focus on the customer, we are going to continue taking steps to create new offerings and make targeted bets in blockchain gaming and cryptocurrency. We recognize that our special connectivity with gamers provides us a unique opportunity in the Web3 and digital asset world. We have learned from the mistakes of the past decade when GameStop failed to adapt to the future of gaming. It is important to stress that GameStop had become such a cyclical business and so capital-starved that we have had to rebuild it from within. We've also had to change the way we assess revenue opportunities by starting to embrace, rather than run from, the new frontiers of gaming. Although there is a lot more hard work and necessary execution in front of us, GameStop is a completely different company today than it was at the beginning of the fiscal year. Shifting to the fourth quarter, I want to briefly touch on a few areas. We continued to establish new and expanded brand relationships, including with PC gaming companies such as Alienware, Corsair, and Lenovo. This helped grow our PC gaming sales by 150% for the full year. We also formed a partnership with Razer to support sustained growth in PC gaming and console accessories, such as controllers and headsets. We now have more than 100 Razer SKUs, including the company's latest laptop. We grew PowerUp Rewards Pro members by 31.8% on a year-over-year basis, taking total membership to approximately 5.8 million. We launched a redesigned app, which includes an enhanced user interface, improved scalability for a larger product catalog, and more functionality to support exclusive offers and promotions. We entered into a partnership with Immutable X that is intended to support the development of our NFT marketplace and provide up to $150 million in IMX tokens upon achievement of certain milestones. We have commenced discussions with an array of Layer 1s and Layer 2s about prospective partnerships that include development benefits and financial incentives. If and when more deals come to fruition, we will announce them. Let me now turn to our financial results. Net sales were $2.25 billion for the quarter, compared to $2.12 billion in the fourth quarter of 2020 and $2.19 billion in the fourth quarter of 2019. This was the first quarter in which our growth topped pre-pandemic levels. For the full year, net sales were $6.01 billion, compared to $5.09 billion for fiscal year 2020. As indicated in the past, long-term sales growth is the primary metric by which we believe stockholders should assess our execution. SG&A was $538.9 million for the quarter, or 23.9% of sales, compared to $419.1 million, or 19.7% of sales in last year's fourth quarter. We reported a net loss of $147.5 million, or $1.94 per diluted share, compared to a net income of $80.3 million, or income per diluted share of $1.18 in the prior year fourth quarter. For the full year, SG&A was $1.71 billion, compared to $1.51 billion for the last fiscal year. We had a net loss of $381.3 million for fiscal year 2021, relative to $215.3 million for fiscal year 2020. Turning to the balance sheet, we finished the year with cash and cash equivalents of over $1.27 billion, roughly $760 million higher than the company's cash position at the close of last year. We are maintaining a sizable cash position, even while continuing to invest heavily in inventory to drive pragmatic growth and meet demand amidst global supply chain issues. We intend to build up our cash position by the end of fiscal year 2022, assuming the operating environment permits. At the end of the year, we had no borrowings under our ABL facility and no debt other than a $44.6 million low-interest unsecured term loan associated with the French government's response to COVID-19. Capital expenditures for the quarter were $21.3 million, bringing full-year CapEx to $62 million. CapEx may remain elevated as we make pragmatic investments in our infrastructure and tech. In the fourth quarter, cash flow from operations was an outflow of $110.3 million, compared to an inflow of $164.8 million during the same period last year. In order to meet customer demand throughout the holiday season, we maintained a higher inventory level. We believe our inventory level remains prudent given our operating headwinds and increased customer demand. We ended the year with $915 million in inventory, compared to $602.5 million at the close of fiscal year 2020. To put things into context, the combination of supply chain issues and the Omicron variant had a sizable impact on this past year's holiday season. We made the conscious decision to lean in and absorb higher costs in order to meet customer demand. We felt, and continue to feel, that investing in our customers and rebuilding brand loyalty right now is in the company's best interest over the long term. With respect to an outlook, we're not delivering guidance at this time. We do not feel it's prudent to provide guidance during the early stages of our transformation and with the current global backdrop. What we are comfortable saying is that we anticipate growth across our stores, e-commerce properties, and blockchain gaming offering. In closing, we know the investments and sacrifices made in fiscal year 2021 will take time to yield tangible value, but we are completely comfortable with that. If GameStop is going to once again become a market leader in gaming and also realize new revenue opportunities across emerging communities, we needed to lay a lasting foundation rather than taking shortcuts. That is what we did over the past year as we started to transform into a technology company. I'll wrap up there for today. As always, we appreciate the enthusiasm and support from our customers, employees, and stockholders.
This concludes today's conference. You may disconnect your lines at this time. Thank you for your participation.
So, no forward guidance, which is unfortunate but expected, especially after his letter to BBBY. I'm very interested in the acquisition of new companies in the following 2 quarters, especially as they move towards the NFT marketplace. Net sales year over year and quarter over quarter improved. SG&A up. EPS heavily affected by inventory purchases and investment into infrastructure, rebuilding not only their computers, their network structure, their app, their warehouses, still investing heavily into growth. They're starting to dip into the money. Cash flows remaining positive. $300 million growth in inventory. CapEx is only at 62 million, so they're being extremely frugal with the money. The only debt they're still carrying is that $44.6 million loan. $40 billion projection for the NFT marketplace expected in Q2 is bullish as fuck. Unfortunately, no Q&A, so analysts are going to beat us up. Expect dips. But don't forget that we're running into that wall of the futures expiration tomorrow, S&P ETF rebalance, and multiple ETF dividends next week as BBBY FTDs continue to accrue. And we could see waves of pressure from those FTDs start to occur, much like we saw with Cohen's buy-in last year to GameStop in January. If pressure is applied to the ETF basket through Cohen's purchase, GameStop contained in that basket could realize obligations due to it covered as well. So the potential for price action still remains, but expect a beating going into tomorrow morning. Any questions? NFT platform statement forward guidance. Win Moon. I think it was good. It wasn't, I didn't expect positive EPS. I did expect that they could report like up to 50 cents per share. But that would mean a cutback in growth, which we don't want to see, right? We want to see that continuous investment into growth until, performance outweighs the investment into growth, right? How are you feeling about it? I'm feeling fine. I'm still excited for next week. I think we've got some stuff coming up. A series of compounding events, much like we ran into in January. Unfortunately, what we should have realized in January has likely been kicked to now. So maybe even better. Increased cash holdings, $40 billion NFT marketplace. I've seen some projections from analysts on the NFT marketplace, and I've seen projections of revenue stream of 1.5 up to $8 billion a year. It depends on how much, longer the NFT hype lasts, right? And then how much of that is translatable to the general public at large. So they've got to move quick in that space, and the sooner the better. When sell CCs. Still not yet. If they were going to do a share buyback, did they have to announce on that call? No. As a matter of fact, safe harbor laws mean that they don't have to announce until the next earnings. Even if they do commit to a share buyback with that $101.3 million in available capital, they don't have to announce that until the following quarter. So they can keep that close to the chest. If they're still bringing on employees, especially executive level, you can expect them to need shares to provide compensation. What does a share buyback accomplish? It gives them shares to provide employees. It just makes the employment offers more attractive and allows them to pick up better talent. We're getting killed in after hours. Killed is a strong word, but back down to our, what, 79 is it? Yeah, 78. I mean, this is just right within the resistance from the other day. So 2 days of positive price improvement washed out. That's not the biggest deal. Don't forget, at these prices, not only is it less worthwhile to short the stock, it's more interesting to larger institutions. If institutions determine a fair valuation of GameStop between $80 and $100, then these prices are attractive to them. Institutional buying's good for us. Yeah, they have $101.3 million left over from a previous share buyback agreement. It won't affect far-dated contracts at all, really. Nope. Bullish on buying this dip if it lasts. There are some positive things said there. I would not be surprised if with the partial announcement of the NFT marketplace at Q2, that can really pick up institutional interests that want to buy in now at these low prices before the speculation kicks off. Like we're in an accumulation phase, right? So these prices are likely the cheapest we're going to see. Remember, the lower the drop the price, the more buying power retail has as well. So it's difficult to drop the price down into these double digits. And if institutions want to get in now, before the speculation and the hype kick off, this would be the time that they would be looking to do it. I think the results combined with share price suggest a future value at a much higher level. I'd expect more institutional buy-in now. I agree. Pretty please go into, we don't own the float. It's important we know what's going on. Thanks. I mean, it doesn't look like we do based on DRS growth numbers and shareholder numbers. It's possible, but I mean, even if 125,000 people had what, 63.41 shares outstanding divided by 125,000 shareholders, that would be an average of 507 shares per shareholder to own the float. I don't think the average is that high. I would say that XX and X shareholders still represent the majority of retail shareholders. But I mean, with the DRS numbers, it doesn't look super likely. Also, shares available to borrow from retail brokerages haven't been all that high. There's more to dig into there, but you'd expect with 100% share ownership and 700,000 people on Superstock that you'd be seeing significantly higher DRS numbers, especially during that period from October through January, where it was, the popularity was sky high. Earnings pretty bullish. I don't know if price improvement bullish. We'll see. If institutions want to jump in, it'll drive our price up. We're still illiquid. 4.4% borrow rate. Still needs to hit 10. Hey, Gherk, the 125,000 shareholders, surely that must be DRS only, because how would GameStop be able to know how many individuals are holding in brokerages? Bloomberg? I think Bloomberg reports shareholdings in retail brokerages. It could just be DRS. I don't know. That's kind of not very specific. Is more than 10% of the float DRS? Not significant. I mean, it's probably higher now, given that there's been another month. It's not fantastic. 3 million shares after that initial 5 million bump into October. I mean, it shows a rate of decline. I think a power law applied to that would... Yeah. I don't want to not be bullish about it, because like I don't really care if people DRS or they don't. I would have expected more personally. And no, it's not because I didn't DRS. I don't have that many shares. DRS holders, current price is $780 million. $71.2 per shares per person. That doesn't make sense. I don't know. It's not something I've seen reported before, so I'll have to go back and find other 10Ks that have reported registration numbers or employee held benefits and see if they report the number of employees holding. Relax, they haven't counted my 10 DRS shares. What's CapEx? Capital expenditure trash. Happy birthday to RC's dad. Well, then that also shows, you know, a negative sentiment towards DRS by shareholders, right? Either way, I mean, even if it doesn't account for all shareholders and only DRS shareholders, and all shareholders are significantly greater than DRS shareholders, then it's showing the rate of DRS is very slow. It's good. Drives the liquidity. I mean, it means bigger ups, but also bigger down. Volatile stocks don't make for promising buy-ins for institutional shareholders. Something that I think they've kept elevated for a year in order to drive long institutions away from the stock. But almost all 20K shareholders in Avanza will likely never DRS. Where's the proof of these numbers? I don't know if I expect too much shorting until they get XRT off reg show. Not excessively. I have a couple of June 90Cs, which should drop back to around where I bought them. Is rolling out and waiting for a better entry good? I mean, Junes are probably fine to hold for a couple weeks to see how this ETF shit plays out. They're not going to really lose a lot of value by mid to late March. SS DRS bots list 18K posts at 2 million DRS. 125 number is likely just all DRS shareholders. Maybe. Although, I mean, that's a big difference between posts on SS for DRS and total DRS numbers. And it's like a little slightly above 10% of people posting their DRS numbers. It's possible. I mean, not everyone wants the attention. Who is DRS? Anyway, how do you think $40 billion marketplace official NFT platform announcement will be priced into the stock? Speculatively, they're saying a quarter two launch. I think it'll drive interest. I think that might be the thing that drives interest the most. December 10th, January 29th. DRS hype didn't kick in until quarter 3 earnings call on 12/10. The count for quarter 4 was cut off for this report 129. Sure. The 10 case. It says 125,000 shareholders. There's only people, organizations who hold in their own name. Okay. Avanza, Twitter, March. 322,554 shares. 545 shares distributed among 22,000. You have to remember that a lot of European countries, the shares held by you are held in your name. I don't know which ones. It's not international finance, but I'm not going to get into the DRS argument. The numbers came in below expectations. I don't care about them. We see interest immediately tomorrow or over the next weeks. It could be right away. I mean, the price is cheap right now, so. NFT marketplace adds 1 to 2 billion revenue annually. That's super fucking bullish. Also, if e-commerce sales are up at the shareholders meeting, if retail sales remains solid and e-commerce sales surpass retail sales, officially making GameStop a e-commerce company, that could add, 15 to 20 billion dollars to the valuation, depending how much. But I think it bounce back by open. I already think we're pretty low. DRS is a thanks, courtesy like. Bithead, at least it will be cheaper to roll options shortly. Thanks for the help and understanding. No problem. Power loss suggests next DRS number is 10.5 million. I got into this thing for the squeeze. We expect the company to be worth more organically over time. Looks like that's happening. Yeah, exactly. I mean, as long as you have confidence in the long-term play, then the squeeze is, secondary to that. It's great. I hope it happens, but ultimately we care about GameStop. And also the thing that will get the shorts off the stock the fastest will be growth in the company. You create a company not worth shorting, and you've done a good job. We stream earnings. DRS removed 9 million shares from circulation. It doesn't remove shares from circulation. It just means that the shares left out or left outside of DRS are just lent more. That's all. It doesn't stop the lending process. It also doesn't stop ETF share creation. You look at King Cobra in your new chair, TKS. Thanks, JC. How long will it take Ivy to crush it open? Immediately. What's something from your earnings you were hoping for that didn't? I didn't expect forward guidance, but I would have liked a Q&A. Something to rile up the analysts, What upcoming trading days are you to watch out for? Tomorrow's interesting, being quad witching. It can be volatile, but I don't expect a lot of price movement out of it. Next week, with XRT's dividend, the Vanguard ETF dividends, BlackRock ETF dividends, the S&P ETF rebalance coming this week. I think, and all those obligations from the last quarter locked up in those ETFs, I think we could see some pretty interesting price action. We're also looking for BBBY to be added possibly to the reg show threshold list after the futures expiration, which also occurs tomorrow on quad witching. Remember, those futures contracts used to satisfy that negative net balance of those ETFs. So those forwards not only need to be satisfied, they have a very short period of time to get the underlying shares required to deliver. What company trading days? BBY to refuel before shareholder meeting MOASS. Does the earnings call give you a more positive outlook on the stock? Yeah, I mean, he didn't say anything I didn't expect to hear. I was happy about, their frugality with their capex. I like that they're increasing inventory. I think it's important right now. That's probably about it. And everything else I sort of expected. I didn't expect him to announce the launch period for the marketplace. That was unexpected and very bullish. Can you explain the concept of a proxy fight? Essentially, you have a large interested shareholder who wants changes to the board. And so he demands a proxy vote among the shareholders, usually reaching out to those shareholders and pushing for the changes that he wants to see in the board or the company. And then their shareholders vote on that. So it's kind of a shareholder versus the board type situation. Oh, significantly if GameStop starts to realize revenue from it. Do you think NFTs are a bubble waiting to pop? I don't think they're dumping a lot of money into the NFT marketplace. Like they're spending there, but it's not crazy. I think it's going to be a supporting to their primary business of retail and e-commerce. It's not like they're becoming an NFT company. They're still an e-commerce company. They're building, they spend a lot of money building out their e-commerce app. This is the value focus. The NFT marketplace is a speculative focus. I still think, given even though the bubble could pop, that sentiment, as long as the sentiment is still strong in a couple of quarters, I think and it's more relatable to the public. Like the longer it has steam, right? Kind of like crypto back in the day, the longer people are talking about it and more people learn about it, the more popular it can become. So I still think NFTs are kind of in their infancy as far as that. I also think that the things that NFTs can be used for are far broader than what they're used for currently. I think right now everyone kind of thinks of them as just being like gifts, but there's so many different avenues that you can take that down. When you straddle earnings, do you face forward or backwards? Forward, but it looks like I'm gonna get fucked because this is super flat. I like to look my earnings in the eye when I straddle them, Velvet. NFT is a cheap way to authenticate something digital. It's critical infrastructure. Yeah. Yes. Yeah, they can continue to pivot into other things blockchain related. They can offer crypto rewards to power up players used in their crypto marketplace. So there's all kinds of stuff. Chart Exchange reported 83% short volume and a total of 12K shares traded on the lit exchange. Fantastic. And I think NFT authentication for products, there's all kinds of stuff, especially for piracy security. If they can develop a way to utilize it for that, it'd be very valuable, especially to game developers. They take phone calls from analysts, big analysts, Standard & Poor, Barron's, Jefferies. Did you say they mentioned the 100 million available for buyback 3 times? They could. Yeah, price is low. There's no reason for them not to buy back now. Who won the limerick competition? I haven't judged it yet. If you guys want to submit limericks to my DMs on the Discord, for St. Patrick's Day. We're giving away like a $50 in GameStop gift cards, like a $50 bookstore gift card for the winner. Fun thing to do. They can be raunchy. It's fine. Read some limericks, Pickle Man. Not today. All right, guys. Happy St. Patrick's Day, and cheers to you all. Have a good night.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
We're not a cult, yo. Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico! Sit, Krian, sit. Good dog.
get any of that?
It's a good show.
Not an advisor. Frigulond.